Good afternoon, everybody. George Cavaligos for HFT Bonds. I want to wish everybody a safe and happy Thanksgiving first of all. A couple questions in the chat today. Because we sort of hit some pretty important support levels and we've had 3 big down days in the market, if it was time to get long. I don't think so yet. The market hasn't been able to break above any kind of resistance levels. I'm focused on the old lows now at 133.15, 15 plus. And what was it, 150.09 in the bonds? You know, until the market can show us some kind of strength and get above some of these old lows, I don't think you want to be buying anything here. You know, maybe Friday, we'll see what happens. We've met some objectives on the downside, but that doesn't mean you're supposed to get long the market yet. I think you want to wait. You know, it might see even lower levels here. I certainly didn't cover any of my core TBF position. I'm still looking for that 29.15 level, fill an old gap. I think that would test the old lows, that 133, what was it, 132.25, I think, 133.02, somewhere down there. I can't remember right now, I'm sorry. But we've got more downside, I think, before we get a tradable bounce. Now we are in what looks like, if you look at an hourly chart, we have 5 pretty clear waves down. Problem is the 5th wave's a little bit short still. Right now at today's lows, that 133.10 area in the 10-year, the 5th wave is equal to 0.618 of the 1st wave. That's a target. It's not the best target. Typically the 5th wave will always equal the 1st wave. That takes us down to 133.04 area on the 10-year and 149.0608 area on the bonds. That'd be perfect. You know, if we go down there, you know, Friday, see another big sell-off Thursday night into Friday morning. We do have some data coming out of China, the flash PMI numbers. I think that's tonight. No trade, obviously, tomorrow. And then we're back tomorrow night with Globex. So we'll have to see how these numbers come out, how the market responds to them. I wouldn't be surprised to see the market bounce back up above that 15 level now and go into some sideways to higher corrective trade. Remember, the first corrective move is typically back to the previous 4th wave of less degree. In this case, it'd be, what, 133.23 to 25 area. And it also lines up with a couple old highs and an important old low, too. So that's kind of my game plan. Down, unless we get a rebound here, which I don't expect at this point. But, you know, still more downside, I think, is what I'm trying to say. Don't get caught long here with some kind of bad data out of China.